Sales and operations planning, S&OP, is at the heart of IBP and particularly critical in the oil and gas industry, where a balance must be struck between supply, capabilities, and market demand under volatile conditions. IBP's S&OP module facilitates a structured process to align all stakeholders on one plan, typically on a monthly cadence. In practice, this means bringing together forecasts from sales marketing, supply plans from operations, inventory strategies, and financial targets into a single consensus forum. In oil and gas companies, S&OP, often broadened to integrated business planning, might involve participants from upstream production, refining, trading, marketing, logistics, and finance. The goal is to agree on a plan that maximizes profitability while meeting customer demand and respecting operational constraints. For example, a typical S&OP question in this industry could be, given the projected regional fuel demand for next quarter and current crude production levels, do we need to adjust refinery run rates or import-export plans? What if oil prices drop by 20%? How do we reallocate resources? IBP provides tools to answer such questions through scenario management and what-if analysis. Scenario planning in IBP allows planners to create multiple versions of the plan and simulate different assumptions. This is extremely valuable in oil and gas, where external factors, price, demand, new regulations can drastically alter optimal plans. Planners can quickly model scenarios such as high demand scenario. For example, assuming a cold winter increases heating oil demand, low price scenario, oil price crash leading to budget cuts or operational disruptions, loss of a production well or a pipeline outage. IBP's platform supports real-time simulation and comparison of scenarios for fast, informed decisions. Users can tweak demand, supply, or key parameters in a sandbox version of the plan and immediately see the projected inventory levels, costs, or service levels, then compare scenarios side by side. This helps decision makers evaluate risks and trade-offs before committing to a course of action. For instance, consider an oil and gas producer with both upstream and downstream operations. Using IBP S&OP, they could simulate a scenario of a refinery shutdown. Demand would then need to be met by alternate supply, perhaps drawing down inventory or increasing imports. The scenario planning would show if customer demand can still be met and how inventories are drawn down, as well as the financial impact of sourcing product externally. Another scenario might simulate a surge in demand for petrochemicals due to a competitor outage. The company could evaluate diverting more feedstock to petrochemical production versus fuel, examining margin impacts. IBP makes such complex scenario modeling feasible within the S&OP cycle, whereas previously it might require ad hoc spreadsheets and significant effort. Financial integration is another aspect of IBP S&OP. Oil and gas firms benefit from tying volume plans to financial outcomes, revenue, cost, profit. IBP can be integrated with SAP Analytics Cloud (SAC) for planning to include financial modeling, or key figures like projected revenue and projected margin can be included in the IBP planning area itself. This allows S&OP meetings to discuss not just volumes, barrels, tons, but also dollars, ensuring the chosen plan meets corporate financial targets. For example, if one scenario yields higher volumes but lower margins due to price assumptions, while another yields slightly lower volume but higher profit, leadership can make an informed decision on which scenario to endorse. Importantly, IBP S&OP fosters collaboration and accountability. All participants work with the same data and assumptions in IBP, which reduces debate over whose numbers are correct. The system's social collaboration features like commenting on cells or using the SAP Jam integration historically let teams discuss adjustments within the platform. One can attach notes explaining, say, a demand forecast adjustment due to a marketing promotion or a supply cut due to maintenance. The net effect is breaking down silos. As SAP highlights, IBP S&OP helps break down operational and planning silos and improve teamwork and efficiency in the planning process. This cultural shift is vital in oil and gas, where traditionally the upstream and downstream sides or operations and trading might operate semi-independently. Under IBP, they are encouraged to collaborate, with the S&OP meeting providing a regular forum for joint decision making. Let us consider an example. An international oil company uses IBP for S&OP to manage its global operations. Each month, the demand team enters a forecast for refined products in various regions, North America, Europe, Asia, into IBP. The supply team inputs production forecasts from oil fields and refining capacity data. Marketing provides pricing and margin outlooks. IBP's optimizer is run to suggest a rough cut supply plan, which refinery should supply, which market, how much to draw from inventory or imports, that balances everything at minimum cost. However, planners also create two what-if scenarios. One where oil price is 15% higher to see if they should produce more, as margins would be good, and one with a major refinery offline. These scenarios are compared in IBP on metrics like service level, inventory days of supply, and projected profit. The outcome might show that with the refinery offline, certain markets face shortfalls, prompting contingency plans like securing supply from third parties ahead of time. The executive S&OP meeting then uses these insights to decide on the final plan. For instance, ramping up production in other refineries and increasing inventory builds as a buffer given uncertain prices. After the meeting, the agreed scenario is set as the operating plan, which IBP then uses as the basis for more detailed planning. In summary, S&OP in IBP provides oil and gas producers a strategic decision-making process supported by data and advanced scenario analysis. It transforms planning from a reactive task to a proactive exercise of evaluating options and risks. By regularly running S&OP with IBP, companies can anticipate changes, market or operational, and prepare responses in advance, whether that means adjusting production levels, repositioning inventories, or revising sales commitments. This is crucial in an industry where surprises are frequent and costly. The next sections will dive into the specifics of how IBP handles the detailed demand planning and supply planning that feed into the S&OP process.